This probably went about as well as could be expected for Elon Musk. Short of the judge outright dismissing the complaint from the SEC, it was clear almost from the beginning that the judge was not happy that the SEC had immediately gone to a request for contempt of court, as opposed to trying to work things out between Tesla, Elon Musk's attorneys, and the SEC in terms of what he should be doing with his financial communications and the settlement that they had reached previously. So here's what Judge Nathan said to Elon Musk, his attorney, as well as to the attorney for the SEC. Basically 3 words: work this out. She said that the SEC attorneys, as well as the attorneys for Tesla and Elon Musk's attorneys, must meet for at least 1 hour over the next 2 weeks, and then issue a joint letter to the court saying, this is where we are, this is how we think we can modify the previous agreement between the SEC and Elon Musk.
Very impressed with Judge Nathan. Judge Nathan's just, I think, an outstanding representative of the judiciary. Very impressive. Their arguments were excellent.
Do you think you can work this out with the SEC over the next 2 weeks?
Most likely.
He would like to say a whole lot more about how he feels about the SEC. We know how he feels. He has made it clear over the last year, 2 years, he has no respect for the organization. And yesterday in court, it was clear the judge was not going to go down that contempt of court route, even as the SEC tried to lay out their case. Now, they've always been strong in California. It's always been their strongest market. But look at the surge in sales this year. Nobody's close to them, up 64%. There you see Porsche, Hyundai, and Kia. The strength of this, the Model Y. Now, the Model 3 has always done well there, but the Model Y, it is the 5th best-selling model in California. The estimates continue to go up, not just because of California, but because of what they're doing worldwide. The estimate now, according to FactSet, is for full-year deliveries to reach 893,000 vehicles. Don't be surprised by the end of the year if the estimate tops 900,000 vehicles. As you take a look at Tesla over the last 3 months, remember, the Gigafactory hasn't even come online. It starts production the end of this year. We'll probably start to see the first vehicles coming out of the Gigafactory next year, and we don't see the Cybertruck until towards the end of next year. Ford, Rivian, and General Motors, all of them have electric pickup trucks that are either have already started deliveries. In the case of Rivian with the R1T, you've got the F-150 Lightning from Ford, and then you've got General Motors e-Silverado, Southern California. And it's also a nice mix of both the traditional full-size pickup buyer as well as the lifestyle buyer. And that's where the Cybertruck is likely to do very well. So new numbers out of California show just how strong Tesla is in that state. And I expect that they will maintain that dominance, certainly when it comes to electric vehicles in that state. But when you see the overall market with the Model Y, now the 5th best-selling vehicle overall, shows you just how quickly Tesla has established itself out there.
Tesla is obviously a huge company, very successful company, and its share price has gone through the roof. But what is really unprecedented about it is just the scale and the activity in the options, Tesla options. We're talking $240 billion worth of nominal options trading a day. That is twice as much as there's Amazon and almost twice as much as the rest of the S&P 500 complex combined.
Why do you think this is? Is it, say, something about sentiment overall? Is it about this giant turn that we're making in one of the biggest industries in the world? Is it about his cult of personality as the richest man in the world?
Tesla is unique in how it's captured the zeitgeist of innovation at a time when technological change is so rapid, right? And we can see that electric vehicles are going to be a far broader part of the future. People then extrapolate into thinking that Elon Musk is going to solve all sorts of problems and revolutionize all sorts of industries. And when that hype, and that's been building for years and years, combines with an incredible retail trading environment like we've seen over the past 18 months and a resurgence of options trading, you kind of have a perfect storm. You have a great meme stock, basically, the mother of all meme stocks, combined with a once-a-century options trading environment. And what you get is, a mega cap like Tesla adding $400 billion of market cap, for almost $500 billion in a year.
How much of a market risk is Tesla and Elon Musk right now?
What happens in Tesla doesn't stay in Tesla. it is just so big now and has such a huge options market and associated structured products that reference Tesla. Lots of hedge funds are long or short. All fund managers basically get whipsawed depending on what kind of weighting they have in Tesla. That is just not something we can ignore anymore. Now, whether it's a market risk, I mean, what people call a systemic risk, that's what I'm not so certain about. But I do think that although, Tesla dropping 10, 20% isn't all a disaster. We saw that after Musk, started selling down his shares and after the result of some of these tweets. That didn't ripple that much further. But that just took Tesla back to where it was in October, right? I mean, Tesla could basically drop 50% in value and still be one of the most richly valued companies in the world.
Rivian's valuation is certainly extremely high. Anytime you're talking about a company that hasn't really sold any product yet and has $100 billion plus valuation, you've got to stick your hand up and say, yes, that is a huge valuation. Is it a bubble? Not necessarily, but it's huge. Rivian is a hot stock. It is very volatile. It will continue to be volatile. And for the reason is really that while it trades as a stock, it's really an option. You've got to think about it like the way you think about options. Rivian is an option on Rivian being highly successful in EVs. Tesla was the same way before it was making money. It was an option on a potential future. Options always have more volatility than underlying stocks, and Rivian's exactly the same way. So let's say right now the stock is discounting a 30% chance it can be a highly successful company. It might go to 20%, in which case the stock drops a lot. It might go to 80%, in which case the stock doubles or triples. But you got to think about it in terms of options payoffs. It's not really a stock. It's just a very long dated option with all the volatility that implies. You can kind of dismiss the other EV companies that have kind of come and gone, the small ones that no one really paid much attention to. But when you've got a $100 billion market cap, every institutional investor in this country and around the world has to take it seriously, which means they've got to make a decision. Do I own all my Tesla, or do I sell some and buy some Rivian just on the off chance that it can be maybe not the next Tesla, but a $500 billion market cap company, in which case it's a five-bagger from here. So that's why it's the first legitimate competitor to Tesla in capital markets. Every company knows that it cannot do it on its own. It needs help from others, Tesla being probably the one exception. They've done it largely on their own. But if you're a Rivian, you need customers in the form of Amazon. You need to have partnerships with OEMs, such as with Ford, because everybody's relying on everybody else to produce these kinds of vehicles and have some diversity in the product offering. But if you want to play in the space, you do probably have to play both sides of the trade. You want to have some of the exposure to the upstarts, Tesla, Rivian, etc., but you have to keep a foothold in the old space, not because they're necessarily going to win this race, but because they have the building blocks that could potentially allow them to win. The automakers have thus far addressed the issue by building out their EV capabilities in-house and leaving the companies combined. However, that gives them no advantages and one distinct disadvantage. Their cost of capital is much higher. If Tesla needs $10 billion, they can go sell stock for $10 billion. It's 1% dilution to current shareholders. If GM or Ford did it, it'd be over 10% dilution to current shareholders. Everybody has to pay attention to this, if for no other reason than Apple has about $160 billion, $170 billion in cash in the bank. It's roughly the same size as GM and Ford's combined market cap. That's how much cash Apple has. That's how much cash Apple has to invest in AVs and electric vehicles and any other transport technology it wants to invest in. Why is Tesla a $1 trillion company? Why is Rivian a $100 billion company? It's because there aren't enough EV and AV stocks out there. It's another reason why Ford and GM should consider spinning it off, because you do have to provide the market with what it wants, or it creates bubbles. And that's what we're seeing here to some degree.